In this video, I'm going to answer why Bitcoin Maxis hate me. And we're going to discuss also more intrinsically, outside of the emotive elements of that statement, Ethereum BTC and our history with discussing this particular chart. We have continued to assert since the major bull blow-off market of 2017, which saw the relationship in Bitcoin eventually top out December, quite a violent swing in the Ethereum Bitcoin relationship. We even shorted progressively against Bitcoin, Ethereum and XRP during the markets. And that would have seen from the 12% all the way down, eventually right down to in and around 1.7%. That doesn't mean we were in that whole journey short. We were on and off shorts during the bear market period. We traded relative strength and dominance was king. And the main token was Bitcoin. However, we've recently become a lot less popular with the Bitcoin Maxis. That spans from in and around the year 2020, around about May, March, April. In terms of this particular chart, I'm going to switch to log scale, and I'm also going to increase the view so that you get a bit more real estate to see what we're talking about. And that was the overall view that this was an upside HVF structure and was going to start to see Ethereum begin to overperform Bitcoin. Now, that's not a popular message, especially when they see you as one of your own for choosing Bitcoin over Ethereum. We are neither a believer in either. We look at the tracks in the path and we are trackers in the sand, and we call what we see. If you're hunting elephant, but we see lion paws, we're not going to tell you it's an elephant. We're going to tell you what we see, even if it's unpopular news. And this was a bullish structure that saw us in and around this period have a break up in Ethereum from around the May-June period. So June, you were in and around the 2.4%. We stuck our neck out and said you will go up to 4% of a value of a Bitcoin, and this will be systemic of a long-term macro reversal in the relationship between Ethereum and Bitcoin, where Ethereum will begin to overperform. That was said in and around this May-June period over here. Now, as an important quick side take, can I just remind you that Ethereum's price in the May-June period, and I will just switch the eye off for all the work that was going on over here, was in and around 199. Roughly that point there, you could get an Ethereum for $199. The close there was 187 on the 4th of May. The close there was 199.9. You're talking sub $200 Ethereum, where the price today is 4,700. That is 4,700, which is from 200, as you can plainly do the maths for yourself, is around 22, 23 times the in scale. So you've had a 20x that you would have had if you had taken for the year under review from May to the 18 months to this current period, the better part of 20x. We consistently stated our message that Ethereum was going to outperform Bitcoin. So let's just take you back to that chart that we had and put the eye back on for that analysis that we were taking you through. So during this period, we expected the move up to the 4% mark. It had shown itself a resistance point previously. You also had an upside target that was generated from here that projected in and around over these levels. So through 33, we remember the magical 33 number, and we expected overperformance. During that period, that's exactly what transpired. Ethereum made it to previous resistance before it ran into heavy weather. So I'm going to drop a time frame and show you the course path of our calls on Ethereum. That is currently a weekly time frame. If we go down to the daily time frame, or let's drop it slower than that, let's go 2-day time frame and take you into this period over here. At the point where you were rejected there, we highlighted that there was in fact a double head and shoulder. We look at head and shoulders quite uniquely. If you want to find out more, go and check out our themarketsniper.com, book a chat to see if you want to learn more about our particular approach to TA technical analysis and the HVF method approach to trading. We noticed that there was a broadening structure that was coming out, which was showing signs of topping out. As a result, you ended up with a macro head here. You had a main shoulder there and there, as per the blue lines, with secondary shoulders, which we refer to as a complexity in head and shoulder, which is quite unique and quite interesting. As I say, go and find out more in our theory that is available in our premium area by booking a chat at the website. We called a head and shoulder at this point. And we also highlighted that there was an inverted structure. This was again a period of Bitcoin dominance, and we pivoted back to Ethereum underperforming Bitcoin. And during that period, having had a target of almost back down to our funnel level of 2.5%, from the 4% it had made up top here, you ended up seeing the following trajectory take place. And that is how it transpired, with an eventual make and a final dip. This was during a period that Ethereum was coming under scrutiny for a variety of concerns regarding its gas price that bedeviled it more than once. It returned to that 4% level only to make a marginally higher high look weak and fail one more time again. Taking you back up to the higher time frame on the weekly, this piece of price behavior that we've just seen included what ended up being a shoulder for us on a far larger continued reversal of the end of the bear market ETHBTC into this new bull of ETH versus BTC. Again, this was highlighting Ethereum claiming strength against Bitcoin. This led to a left shoulder here, a right shoulder here. This was a complex right shoulder. You'll note you also had complexity in your left shoulder. When you get complexity in one area, it's quite characteristically common to get complexity in the other shoulder. Note the double shouldering before you rolled over, and you still had quite a big rejection point over there. You had a similar event over here. At this point of break, we then made very brisk progress. The call at that point would be that Ethereum would go to 6.6%. During this period when we called for 6.6%, we faced a fair amount of ridicule and complaints of those that were dominant Ethereum, and it wasn't yet working out for them, and it dipped down. At no point did it run the stop loss, which should be under the main shoulder, the lowest point, and in fact all you did is you got cycled around until you returned here. Once it began to run, it ran dominantly from the 66, from the 4, my apologies, to the 66. Remember, we had a 33 target for you up there, which later turned out to be the neckline for the head and shoulder with those double shoulders. This is TA done on cross crypto. It takes out the more skittish element of the FX, which is often news driven and can spoil. I find crypto to crypto charts very clean, because the foreign currency effect is actually hedged out. Both are measured against dollar, and thereby cross-referencing each other is the best and purest form of relative strength from Ethereum to Bitcoin. Since this point, we have remained a bull. However, we said during this period of blow-off, you should close. There will be a period of pause and gestation. That event occurred in and around the target run was during the period of May. 1 year later, from the 2.5% to the 6.6%, which overperformed, actually finishing at a high. You wouldn't have sold the high, but at 8.2%. You actually had a run from the 2.5 level that would have got you out at 3.3. You would have missed this major reversal. You would have probably taken the first long at the 4, been washed into this, and then have to sit it out until we came around and back, as Ethereum was bedeviled with the gas issues. Issues still to this day, I wouldn't say necessarily have been dealt with, but that's a fundamental comment. This is a technical analysis clip on the relative strength of performance of Ethereum to Bitcoin after a bear market where we biased Bitcoin dominance to a bull assessment on the break of the Bitcoin first cup gold nugget that is seeing the overperformance of Ethereum to Bitcoin that took it from 2.5% past the 6.6% target through to a high of 8.2. We warned, however, that this level will probably be a gestation period. Why are things targets? Because by taking off, you can utilize those monies elsewhere where there is a better opportunity. Progress decay is likely to occur. You will go sideways, down, up, and not make new progress for a sustained period. So given that that candle made target in May, it's actually taken all the way through to November of this year. We're actually December, if all truth be told. This is being recorded on the 1st of December today, to clear the previous high first made in May. And throughout this period, you sat in continuation, perfectly straddling the purple line that was the target, where this was the neckline of the inverted head and shoulder with the inverted head and shoulders target. This has been a gestation period where there have been both ups and downs, and holding this trade during this period has not been beneficial until the point of break. Which brings me to another key point where you're going to see the real power of HVF method and the approach that we take in terms of doing this. Note also the falling wedge, which is naturally upside continuation. This is a third high. This is a very moderate down leg leading to a break, and we're going to come on to that now. So let's jump into a different draw and cover this with you where we are now, because many of you will now be rushing into the trade, and it's one of the worst things you can do. Long run, yes, it's a good trade. Short run, you got to be careful. So the target runs straight through this pattern. You've already been shown that here on this particular draw, and that particular scenario where we highlighted a high, a low, a dip, and then a subsequent break. Now let's cover what we're covering in this piece of technical analysis. So the relative strength assessment, we called at all points that whatever comes out of this, and by the way, there's been a number of draws here, we've continued to suspect continuation. These are draws far earlier that you can see where we've been talking about a 9 to 10% test for ETHBTC on a breakup to the upside on a continuation pattern that is on the target of the inverted head and shoulders. These are the things I am illustrating in these snagget draws. This was done some time ago. You can see July, 21st of July. This was discussed. Neckline, target, gestation period, wind up, next level for the dominance of Ethereum over Bitcoin. This included the areas capturing the much earlier interactions from the break as we were progressing to the 3s and 33s that we expected. So we put out this scenario cast, we shared it. Raul has an interest of it. Real Vision has been on the right side of the trade for me. And has been checking in with our opinion on here, and the ETHBTC chart is doing exactly what it has been anticipated to do. So what's magical about this? I'm going to tell you, because it's complied with just about every law of technical analysis that I can actually give you. So first of all, let's just broaden this, and we're just looking at the current structure. Why is this fascinating? Well, number one, let me just go back and grab the key level of 66 that should be through here. That was the target of the head and shoulders. I think that's going to run round about there. That is the target of the inverted head and shoulders that you've been gestating around. Absolutely fascinating. Another key level that we had identified that was heavy and strong. Laws of key levels of significance, a key chapter, one of the foundational chapters in our HVF method theory and work that you will learn and get premium of if you choose to come on board, is that the key round numbers are significant. This is 7.5%. Just run, always just run, a just run. We're iceberging, small tips with much more behind the water line. And this third high, we'll come to that now, literally came up to the level and then down and pulled back to that point. We'll cover that as well in a minute. So 7.5 was a kind of practical resistance. In our form, key levels of significance are just run. They are not points that are not crossed. So let's cover a little bit more. So this is our first impulse. with its complexity and final bottoming here, 2 lows. This is a marginally higher low than that. That's impulse number 1. Change color, you work your way up. By the way, this was quite broad, so that's an ugly scribble of mine. Let's do it again nicely and draw lines. Kind of falling wedge structure-ish, like that. Pumps you into, with the momentum, a squeeze like that. You got a little squeezy Japanesey micro squeeze on the lower time frames that gave you your push up for your final high. Overall, that structure gave you a channel to the upside roughly like that. Scribbling quite a lot there. You can see there's a fair amount of complexity and swing in each of the legs, giving quite a broad channel that was eventually broken with this bear flag over there that led to the down leg. So with that in mind, let's talk about the down leg in a similar fashion. What was good is that that range was tightening. There are still swings, but you can see the channel was far tighter. This shows volatility compression. There's your bear flag, little break through the key target zone. Note the revisit, again down, almost a double bottom low. Again we visit, and then we break out of this channel. A tightening to the previous channels, rather more broad and complex wild swings. So that's a key point. So let's go back to just identifying the 3 impulses. The falling wedge, complex bottom, 2 touch. The second one a little higher is impulse number 1, which is your full bull market into this zone. Impulse number 1. Second impulse in here into the final high, tight channel into the low, is your second impulse to the downside after making the high. Failure to run the previous high, a bullish point, because it points to continuation pattern rather than potential reversal, which a head and shoulder would be. Then we change color one more time. You can see the tightening continues with this channel. It becomes, once you break out, pretty tight. This is pointing to the compression in the volatility and the fact that we could get our break early. You could get your break early because inside of the up and down leg swings, you are actually already tightening on that volatility between Bitcoin and Ethereum. We can draw this either as a rising wedge or as a channel, but you can see the width of that. This becomes your third impulse like that. Now that looks like a falling wedge, but I'm going to highlight to you why it is a priming HVF. You can learn more about primers and why it gives you the absolute gift of multiply your way to wealth when you understand the core principles. Third impulse in there. So you have a 3 impulse upside structure, which many people typically will draw just like any form of symmetrical triangle. Of course, to us it's an upside HVF, and it has similar structure to the first cup gold nugget macro 2.5-year bull for Bitcoin. In other words, it has the bull 2017, the then subsequent bear market, then you had your July just about 14k run, 13.5, then you had the huge quite deep dip that wasn't much higher than the market low. Remember, Bitcoin was at 3.2, and in COVID it dropped down to sub 4. But then on this final down leg, because so much was flushed out on the down leg there's not much more that needs to get out. And in fact, you had a little squeezy Japanesey. We're going to take a little look in there and show you the structure of what is in fact a primer, and gave you the early heads up to start biasing Ethereum. So let's do that just quickly. Take you into, we're on the daily, we'll drop you into the 2-hour, and we'll show you that structure that you were witnessing there. We drew that structure. That is a little primer structure. It's a flat bottom primer structure. Here he goes again. So we start again. There's your draw. There's that final low. There's your secondary, much more calmer on the downside, and your third impulse. That is your break, and that is your stop. This is great risk reward trading, by the way, guys. This is a trigger, a primer, which is the pin on the back of a bullet round that creates the spark. That is the first fire that drives the bigger explosion later. So the smaller fractal sets up and gives you optimized entries and tighter stops for a far bigger move. The target is held not for the target of this pattern, which would take you roughly to around here, but actually all the way for the 10% that we are looking for in the Bitcoin Ethereum relationship. This is going to upset Maxis to a great degree, and I'm sure Raul, when he talks about the progress Ethereum is making relative to Bitcoin, he'll be equally well loathed as we are. Unfortunately for that, we can't do too much about what people want to do or say. This is your macro patterns, third high and third low, which is your macro patterns minimum, latest, just in time entry, and its stop. However, if you understood primers and fractals, you had an opportunity. Maybe you could just put part of your position. You don't have to be all in, to take the smaller and earlier entry with a tighter stop. The fascinating thing about the draw of this pattern is that I've drawn its full target here. I've kept it small. So I'll just fatten up that line now for a second. Note how that target was made, and you got a pullback. Targets are there for a reason. At least at the significance of the small time frame, you will expect and can expect negative or adverse price behavior. Either no further upside progress, churn, delay, pullbacks, all of which extend your time in trade without fresh reward. The second interim of this target, that comes from the second impulse, coincided and confluenced perfectly with the round number of 75, which then of its own accord set up another structure of continuation. This entire pullback into there was again a setup for upside that occurred. Nestled on top of your just-in-time entry for the main pattern, that's the green line, that is essentially a wind-up, having stepped over the line over here, kind of like a little boy putting his foot on the sand and seeing what you're going to do. He then gets the confidence, winds up to make the break and to run. As you can see, the high side was picked by the target of this pattern that was generated, and hence the pullback. You get typical 5 stages of a breakout in on macro, which is the green line here for entry, and the red is that when you break, you get the first stage, break and feign back in. Make the first interim target, which it did, and pull back. Second chance entries were given here for those that wanted Ethereum and could have got in at this level, and they could have utilized the stop here and the entry there, and also pinched their risk reward immensely if they had not jumped in on the primer entry over here. That was your just-in-time entry, confluenced to the macro high, and the 7.5 round number that we highlighted was an iceberging point. It was true waterline. It was really difficult for ETH to hold oxygen above that level. It's kind of like Everest, the death zone. For now. What has subsequently happened? We go back out, we leave these smaller time machinations to themselves. We take you back up to the beautiful symmetry of this pattern and illustrate why it is absolutely beautiful and symmetrical. So here is another key point that you should bear into significance. The main pattern, and I'm just going to reduce the dominance of that 7.5 line a little bit. Don't treat it as insignificant. It's highly significant, and its confluence with the second interim of the smaller pattern, very significant. That's why we churned and sat here and did that wind up. I'm going to reduce the dominance of that line as well because it was a smaller fractal now, and we're back on the bigger view. So here's what you want to watch. The projection point for targets is the midpoint between the high 3 and the low 3. It is a perfect confluence with the 61.8% fib, which is thrown from the high one to the lowest point of the entire congestion period. So the end of the bull for ETHBTC and the beginning of the consolidation that's turned into a continuation upside pattern occurred on this date and at that height of 8.2%. And it was the day of 15th of May, and you would have had an amazing run in Ethereum all the way down from sub $200 if you had listened to what we said on this channel when it was at 2.5% to a Bitcoin, and Bitcoin was significantly lower in value. Since then, you have the perfect 61.8% axis between the third high and the third low. There is that primer that sat you up, that then broke. You could have been in early with a stop there. Maybe you were only in here with a stop there. All is good. What happens when you project the natural geometry from the 61.8? The target confluences with the 1.618. What else is significant about the 1.618 in terms of this case? You're at 0.99, ergo or 10% call for Ethereum against Bitcoin. And in the same way, we had a 6.6 target, but you actually ran 8.2. You should overperform that. How much that overperformance will be is subject to the scale of the pattern, the period of gestation, the overall quality of the pattern, which we go into much more detail in explaining quality of patterns in our theory on the marketsniper.com. Now I want to address the short-term price behavior. What absolutely happens when you just run, you are coming up and run the previous high. The golden law for that is the support and resistance, new high, retail trader gets sheared. They charge in on the fact that Ethereum is now traded higher than 8.2. It hit a high of 8.35 and you get an instant shooting star and you are now experiencing your first pullback. Key level of significance, previous highs just run, shooting star, pullback leg. Absolutely ABC price behavior in every single way. So you have a target now generated at 9.9. You have a key level of significance, which is going to probably be the most significant number for the relative relationship for Ethereum and Bitcoin at 10%. Put the number in there, put him on there. Absolute confluence of those levels. You've got natural geometry. What will happen to that number? It should just be clearly run. And given that this is quite a lengthy pattern, the high was in May, we've actually only officially triggered in November. It's a better part of 6-month pattern. You would expect an element of overperformance. It's the highest quality HVF structured setup. That's basically this draw here that we've had in the relationship between these in quite a substantial time. It's not beyond the realms of possibility that in a blow-off move you see 11, maybe 12.5%. However, I would suggest, as we suggested here, take your money shortly after or at target, because what will then occur will be another period of gestation in relative value for Ethereum BTC, which will involve pullbacks. Note how you fell from 6.6 and you could have held on. You would have seen 8.2, you would have carried on holding on, and you would have been sitting at 5.5 instead of locking in at 6.6. You would have seen that 5.5 almost again, then you would have seen 5.6 almost again. That would have been soul destroying. People can't sit through this. Plus there's carry costs and lost opportunities. You shouldn't have sat through this entire process. And it was 6 months of going nowhere. Unless this was a hodl pot and you've just elected to be blue pot in Ethereum, that's fine. You would have just stated around there. What could have happened that you wouldn't have necessarily known, you were lucky that this is an HVF and is symmetricalized, new word, along the 66.6 target level. It could have created a falling wedge as part of a continuation and still been good for a continuation, but you would have lost value with each different dive and would have probably been shaken out unless, certainly as a leverage trader, hodls would have had to bite their bottom lip a fair amount. As it's turned out, you've been fortunate. This has been a continuation structure. Clearly the demand for Ethereum is there. We are expecting a 10% to be run with the 9.9 target to be run. You have that perfect symmetry that your 1.618 projection of this down leg is going to correlate with the geometry of the HVF's target being placed on top there, as well as the key number of 10%. As I say, you should run it. One other piece of research you could have done in terms of analyzing this as and when is you could have also done the fixed range volume. Now at the moment this is FTX. It's probably not the best one. It's quite high volume, but what you would have also seen is that we have a very nice cluster of volume that was supporting our funnel draw. We look for the main axis of control, which is the red line, to be within our H3 and our L3. Whilst this is on the low side, you have to bear in mind that we didn't have much of a down leg here, and that the next biggest column is higher and higher. So this was the biggest one, but it's a big drop on the lower side. So overall, this is pretty symmetrical on the basis of its axis of control, which is sitting above the 50% line, and for which there's many big others there. You could also have looked at maybe a bigger exchange for that pair, certainly not Huobi, but possibly Binance, and you might get a slightly different element of axis control with a greater participation rate, up to and including the breakout, which is there. And you can see it's pretty much around the same level. But once again, what I want to highlight is the bulk is actually at that level and or above. So the biggest three are there. And even these others are pretty tall Manhattans. Tall as in horizontally tall. Okay, just a couple of thoughts on what you could have done, and that is why ETH is dominant to BTC and why you will get a better entry. So what do you learn from all this? A lot of narrative, a lot of technical analysis skills maybe, but what does it mean for you right now? What it means for you right now on a shooting star, given that this day is likely to finish on a shooting star, I don't know how many hours are left, you're likely to have a pullback. You may even get a revisit to here. That could flush people out of their ETH longs. My personal, if you're of proper big time frame views, is that Ethereum will dominate Bitcoin in performance, and that you are going to do well. The ETHBTC chart is in a good place, and you are going to run 10%. This is not an entry point. Entry points lower down will be better. Now, another key point that takes the comparison between ETH and Bitcoin, and ETH and every other token, which includes Bitcoin, but also includes the alt market cap excluding Ethereum. And what you'll notice is the pullback here is far less severe. So what this indicates to us is that we're going to get a spell potentially of a bit of Bitcoin dominance. Bitcoin dominance. So Bitcoin will come back a little bit, and that's what's holding it up. It is not Cardano. It is not yet Binance, Solana, and the other large alt caps that are bringing Ethereum down. It is more Bitcoin. In fact, when you consider that the biggest component of this is Bitcoin, the shooting star has formed against Bitcoin, but it's actually more just a spinning top and a lot less bearish in structure on the basis of the draw here. So what does that mean? It probably means a little period of Bitcoin dominance. So we'll take you past the Bitcoin dominance chart, which we've been watching as well. We called this breakup and that target being made on that wick. It actually continued to run. It formed a very interesting inverted reversal structure. That target was made to the downside. Now we have a falling wedge. We had a little bit of a bump early, and you can see there is a clear hammer forming here, and you are near relative lows. Overall, to me, looking at Bitcoin, and this might please the maxis in a small way, it shouldn't overplease them because we're calling for overperformance of Ethereum, but that does point to a small rally in dominance. It doesn't have to go far, but that will be a little bit of a pullback on that ETHBTC, allowing new entrants to get in cheaper if they choose to trade the 10% to Bitcoin run. Remember, that's the 10% to Bitcoin run. The actual percent of significance in the crypto space is going to increase, and I'm going to finish the draw, and that's not going to be 10%, it's going to be far higher. Overall, let's just see. We're going to do the draw for you right here, and we're going to go straight to it. We're going to use the same pivot points that were the inflection points on the other. This little wind up with its flat bottom was the same level, and actually we're going to get quite a reasonable dominance move out of ETH in principle. So some of these lines were drawn when we were speculating before that had occurred. That is not accurate. ETH dominance is a slightly different chart. So I've stopped right there and I'm going to come back to this key 20% point because I want to make the case of how clear this 20% level was, such an important level. This is again exponential. This was the same inverted head and shoulder. You have two nestled inverted head and shoulders. This is such a huge point. The one in gray and the one I've done again for you in red. In fact, there's been other instances, but let's just not overwhelm you. Here is the left shoulder that saw that as shouldering, a weak half attempt that failed to get the neckline. This as your head. This is ETH dominance. There again was the first HVF in a new trend that took you to the neckline. That neckline we decided was the 13%. Ethereum as market cap, 13%. Neckline for an inverted head and shoulders. There was your preemptive break that got pulled back on gas. Incidentally, on that pullback, the same 13% was respected on a left shoulder, head and right. I will drop a time frame and I will show it to you. That gave you a better clue than on your ETHBTC chart that this time was for real, because you broke, you danced with the neckline, you had a part run. The target, the 6.6% on Ethereum BTC, the target for this was here at the 18.96. That big purple line that you're seeing just below my pink line is the 18.96 with that critical 20% level mark just being run on ETH dominance there. Now you will notice, and I'm going to go a different color, orange for the red draw, that in actual fact ETH dom has another. And this is such an important point for the future possible potential of Ethereum that is mind-blowing, that this entire head and shoulder down here is all part of a macro head. All of these drawings we've done a long time ago. These are scenario cost of major standing, and that this 20% point, note, just run, you've just got an iceberg out the top there, a whisker through there and a touch on there, and you've got just a whisker there and another one now. Now this is real interesting because potentially if ETHBTC were to have a pullback, Bitcoin dominance was to assert a little bit. Please note, Bitcoin dominance could assert not on Bitcoin being stronger than the other tokens. It could also be the market contracting and Bitcoin contracting less than the other tokens. So it could, in a bullish environment, be the honey badger. It could be in a bearish environment, less prone to the volatility of pullback. So just for that Bitcoin dominance comment, I wanted to drop that in as well. We looked at the Bitcoin dominance chart. So what you actually have on the 20% is further reversal structure. That's right, further reversal structure. You broke with momentum. That's how you should do it. You broke with momentum there again. You touched, you rolled. All a big macro head. All a macro right shoulder. So what, you say? Why are you making such a fuss? Why are you such a drama queen about all of this stuff? What is the significance? I've got this on a log scale. Let me just put this on regular scale for you. If that turns out to be a reversal and you are actually right now in the macro right shoulder, which is currently breaking the neckline and is begun to move for the upside HVF, for, wait for it, 24.47, whilst you may rest after making 24.47, if that is made, everything is still on balance of probabilities, while you may rest on that aspect of 24.41, after resting and pulling back, there is actually a cause and technical structure for a 34% dominance. Small inserted addendum to this crazy ass Ethereum dominance check-in. I've corrected this chart for a couple of small things, annotated it slightly. So we're in an upside HVF for 24%. The move has begun. That triggering event has occurred. 20% we've recognized as a key level. I've already said all these things. In the event of 34.34% being made, that would be subsequent following a pause at 24.41. If that was to be made, a big if, on the macro red inverted head and shoulder trade upside that you're seeing here, in the event of that being done, you would actually probably have seen a further 13% flow into Ethereum, which is at 21% now. That would probably come from, and this is the note I'm making, from Bitcoin, which is at 41%. That doesn't mean 100% of it comes from Bitcoin. There might be a rationalization of small tokens may not be issued anymore. They'll all be deemed securities, lots of clever laws that'll stop Joe Schmo from releasing a scam coin. Lots of them could be eliminated. The dominance, I would suggest, would come from Bitcoin, but even in the event of, say, 7% of 13% coming from Bitcoin, remember the total dominance has to equal 100. So if one token increases in dominance, it's taking from others. So shitcoins could fall to close to zero. There will be a real quality hollowing out like .com that could release some of it. But for 34.34% to be done, you've got to think at least 7's got to come from Bitcoin. Bitcoin is 41% today. That's what I'm saying over here. And if Bitcoin is 41% and lost 7%, that would take it to about 35% of market cap. And if Ethereum was at 34, you're talking at very close to a flipping event. If of that 13, 8% came to Bitcoin, you will have had a flipping event, bang, that would have occurred. Also, my question is Binance token, Solana, Cardano, all of these. There may be a gutting of those that make it a final, who is the king dog, but I don't see that happening in the short term that quickly. There's going to be a lot of competition. There's going to be a lot of need for bandwidth. Short of Ethereum solving its gas issue and being the fastest, quickest, cheapest chain suddenly overnight, these other tokens are going to have a reason to exist. There's Pulse Chain coming. So these, and gaming, metaverse, that's just the scale of the need for this. Whilst I could see the possibility that some of them were reduced, that some of them were eliminated entirely, the fact that these that are also projecting upside on their dominance charts would all be reduced doesn't sound credible. Hence why I'm pointing at Bitcoin, and then I'm pointing to the real low Me Too tokens being largely eliminated, maybe more regulation, etc., etc. Anyway, what do you think? Is it possible we make 34? And for those that say never, can I just also highlight that at this wick high, and we have a lack of data, this only is August of 17, you did trade 31, just under the 31% of ETH dominance before. And just because you've gone, and in crypto, years feel like decades, but it was 2017 and you had in the 30s of dominance before. So never say never. Okay, thank you for this little addendum that we've highlighted, and I'll be tweeting out this chart. All the best and catch you later. Thanks for watching. For Ethereum, remember, we've just looked at, this is why I'm going to upset those maxis so bigly. We just looked at Bitcoin dominance at 41%. Today, if Ethereum goes from its current level of 21 right now, don't forget, this is all a macro neckline. The 20% is all a macro neckline. You have an HVF squeeze for your macro right shoulder. After the bear market, huge plunge, dive, swing, dump, and subsequent head, which, by the way, in case you're saying that will never happen, that will never happen, 34.4 cents. Let me just say how many people told me at 2.5%, you ain't seeing 7. Tons, and lots of them maxis. So that is in essence where we are with Ethereum. Could its scaling issue get sorted? I don't know. Could it super dominate? Possibly. Am I saying just because you draw something it automatically means it's going to happen? No, you can't say it. But the first nestled head and shoulders, that's what we call it, the monarch inverted head and shoulder over here, has performed. Did it perform yesterday? No, that's when you did your first touch of the neckline. We call that armpit 2. That's armpit 1. That was when your break occurred. You went on a complete round the houses run before making the target and then going on to the 20% level. If you don't think this is critical, that it ran the 20% level, it kissed the logical round number on dominance right here, even though this one had a big overshoot. Remember, this was huge volatility. This was the bear market turning into a major crash. This was the blow off in Ethereum on ICO mania, the subsequent blow off in Bitcoin that pulled it hard down, and then the crash for all alts and the unwinding of ICOs that brought Ethereum down, down, down. You have heard it here first, a 34.34 dominance. That is 1/3 of the crypto market cap. That would be an additional 13% of dominance on top of its current level of 21. A large part of that is going to come from who? Bitcoin at 41. Bitcoin at 41 and Ethereum to get 13%. How much is it going to come off of? You think Solana is going to stop growing? You think Binance is going to stop growing? Do you think do you think ADA is going to stop running? A bad spell? Yes, but has it really? Have they all stopped dead in their tracks? Where is this dominance coming? If we were, and it's still an if, to make 34.34% in one of the seminal reversals in crypto history. Don't forget, in case you're wondering, it was at 31% already before. Yes, when Ethereum was hitting $1,400 and Bitcoin was moving far slower, the dominance of Ethereum was at 31%. You think I'm mad saying it will go to 34, or there's a chance on balance of probabilities? I leave it to you. But this is your macro Ethereum call, and I think that Bitcoin will be flippant at this point, because I think a large part of that 34, that would represent another 12-13%, has got to come from Bitcoin. And if Bitcoin sheds 10% to 31, you actually have Ethereum as the larger token. I expect in this environment where Ethereum will be doing so well, that some of the other tokens will also be doing well, and that dominance, this is all market cap excluding Ethereum, including Bitcoin, that dominance will be shed from Bitcoin largely, and that other tokens in the platform space will still at least hold their own and or have upside. That is what is possible. Is it a prediction? No, but it's possible. Certainly, we have the target of 24% dominance, which is going to represent 4% from when this broke, which is at the 20.2 level, and that is already a substantial move. 34 is mind-blowing, and I remind you, you were at 30 before in the bull market. Okay, well, you wanted an Ethereum update. You've got it from the man on form of dominance. I promised you to show you that little reversal to show you why that 13% was so key historically, and we'll do it for you perfectly, crystallizing and confirming. Just run armpit 1 over here where the left shoulder ends, armpit 2 where the head has ended, and then a little bit of a test. You had an ascending draw there and a major moon to your called almost 19% target, and guess what? You stood just a little bit above the 20%. And I want to highlight this before I sign off here. This 20% run by market cap has not been noticed by many crypto commentators at all. Ethereum is already now 20% of the market cap. Did you know that? Did you know that? Are you aware of that? How aware of it are you? Did you know this event has occurred? Can I say to you, the last time it occurred for any period was over here, for any period. You got an absolute cat's whisker there and over here and over here and over here. This is a clear close that has not been immediately reversed since the Ethereum ICO bull market and the subsequent reversal that occurred with the 2018 crash. That is a big time ago, and those were big events. This 20% is absolutely huge, and you've had so little time above it since the first break below, and we are taking you all the way back to October 2017 when Bitcoin was absolutely pumping and Ethereum had finished its earlier move that had occurred during the course of the year. Wow. What a fascinating piece of charting we've just done. I hope you found it as interesting as I did. If you want to find out more about what we do, HVF Method, go to www.themarketsniper.com and click and ask to chat with someone nice and friendly, just like you, a couple of years before, who is now an HVF trader. He can tell you in his own words and show you our amazing platform that we put together, our learning environment, and our regular updates, what you will get from me as a premium member, and how and why we are bringing these skill sets to the great technically underserved. We'll see you on the other side of this. Keep trading crypto, keep investing crypto. I look forward to updating you further. Trade small though, and trade smart, and have a reason for your trade. The long positions held on big time frames are your best friend. Short time trading is generally counterinstructive. It keeps you off the macro trends and the key moves, such as when Ethereum is bullish and when it isn't. Bye for now, and we'll catch you again soon. Hope you enjoyed.